To the computer. Beautiful. So we're recording live on Facebook and I'm recording the Zoom meeting, so I'll be able to stick this up on YouTube afterwards. So, right, folks, everybody who's watching, wherever you're watching from, um, I want to tell you about an opportunity, and that's all it is, an opportunity. And first of all, before I get into it, anything that I share with you tonight, this is important, is not financial advice. I'm not a financial advisor. I'm just simply presenting an opportunity to you and something for you to take a look at. If it looks like something for you, great. If not, no problem. I'm not going to be here dictating, telling you what you must do, what you should do, what you can do, what you can't do. I'm just going to share some information with you. And if it looks like something that appeals to you, you can speak to me afterwards and then we can take it further. So, we're going to talk about trading tonight, and there's a lot of, and I'm going to tell you my story about it, or I'm going to give you my perspective on it because I've been involved in trading before previously in the forex markets back in the COVID era when we all had a lot of time on our hands. I was spending a lot of time at home. In fact, I was paying at the time. I was paying between 150 to £200 a month subscription for my education around trading, and I did okay. I did okay. In fact, I wouldn't go as far as saying I made a ton of money, but I did okay. I got something out of it. That's the top and bottom of it. One thing that I did get out of it is a firm understanding that the markets take no pity on anybody. So something that I've learned and really implemented this time around since starting again in January is really focusing on the mindset side of it and the mental side of trading because there's going to be losses. So you might see all the fancy stuff on social media, all these young kids hustling and carrying on like, the pop stars or superstars and, you know, showing off this lavish lifestyle. And I'm not showing any of that because I'm not at that point for starters. Totally transparent. I'm not making, millions of pounds through trading, but I'm doing okay. And for me, the reality of it is people are going to lose money when they come into the space. There's no sugarcoating that. There's no hiding from it. There's no pretending everything's going to be hunky dory because it's not. There's going to be losses. Whether you like it or not, you will take some losses when you're trading. Now, how you deal with the losses will ultimately determine where you go with it through my own personal experience. All right. So if I take a loss and I get angry and start revenge trading or over leveraging or gambling, basically trying to chase that money back, I'm going to put myself in a hole. I've done it. I've done it myself. I've blown accounts. I've put myself in a hole numerous times, lost money. It happens. But once you get your head around the mental side of the game and understand and appreciate and accept that there are going to be times when you're going to lose money and it's part of the process, then the journey will become I don't want to say easier for you, but it will become more bearable and manageable because it's like psychological warfare. And everything I'm speaking about here is all through my own personal experiences of how I've found it. All right, so I'm just going to show you a few little bits on screen share. Um, what is going to be important for you because obviously people want to know, well, how does it work? And what do I need to do to get started? How do we do it all? Do I just lump money in? I've had numerous questions over recent months in terms of how to do it. So I'm going to show you. I'm just on my desktop here, guys. So just bear with me a second. So what we're doing right now is we are working together with some guys who are experts in their field. So let me just quickly take you back to what I was saying before about trading before, when I did it before during COVID, I was spending a lot of hours during the day sat looking at a computer screen, trying to figure out all these squiggly lines on a chart and trend lines, support resistance, whatever. I was trying to figure it all out and suss it all out, and it was time consuming. So this time around, when I've stepped into it, I've not gone down the route of getting a formal education, so to speak, from that standpoint, where I'm on a full-blown academy. I've actually joined a community where it's free for me to join, and I can follow experts. Now, these experts do two. In fact, there's a session that's just been on tonight at 8 p.m. where the traders who are sending us the instruction and the information, they have been on tonight explaining how to do the basics. All right, so that's the kind of education you're going to get. Typically, it's a Tuesday night, Thursday night, possibly is on Sundays, like we've had one tonight, which popped up in the community group tonight. And then there's often a mindset call on a Monday evening as well. So you're getting three, let's say 2 to 4 opportunities on a weekly basis to get free education, to work on your mindset, and to learn the strategy that is being given to us from the traders. So the traders are following a strategy and they're sending us instructions then to follow based on that strategy. So you don't have to be somebody that is on your phone all day, every day, figuring stuff out. You can simply wait for a ping on your phone, look at the instruction, and if you like the look of it, you can then go and place a trade. So when an instruction comes through, the instruction that comes through is going to come through like very, very much like this. So on your screen now, you should see some information that says XAU USD buy now. So basically, that is an instruction that's come through and it's given us some parameters to work within. So if you're brand new to this, you'll be looking at that thinking, what's all them bloody numbers? These numbers are relative to the price of gold per ounce, but we're trading it on the Forex market. So this instruction comes through to the app, you get a notification, you look at it, you think, right, I know what's going on here. We're looking to make a buy order on gold between 4,149 to 4,145, 0.5 on both to be precise. So what that basically means is we're looking to enter a buy instruction on those parameters on gold, on XAU USD. So what that looks like is, I'm going to show you what that would look like on the MetaTrader 5 chart now. So MetaTrader 5 is the app where we will take the trades, and the app looks like this. So when you open your MetaTrader 5, it's going to look like this. Right, and I've put on the parameters on this screenshot. I put the parameters from that particular trade where we were looking to enter. So the entry point was 4149.5 to 4, between the blue lines basically. That was the entry point that was given on a trade at the back end of last week. Now the stop loss that was given, just bear with me a sec. I'll show you on the screen where that was. Where is it? So the stop loss that was given was 4,142. So the stop loss would have been around this region here where the cross is on the screen now. And as you can see, price hasn't been down there. So it's come into the parameters and then price has moved up. And the take profit options that were given were 4152, 4155, 4157, 4159. So the price is already at 4155 here, but you can see on this candle wick that it spiked up higher than that. So probably somewhere between 4155, it might have actually hit 4157. And the instruction that the trader sent us on this particular trade, I'll just quickly go back to the instruction that was sent to us. Stop that screen share. The instruction that was sent was, so this was the instruction that was sent. 4155 was the take profit. TP stands for take profit. That's the target where the trader is expecting price to go. Is he always going to get it right? No, we're going to get losses sometimes. Sometimes it's going to go right down to SL, which means we're going to lose money. But we're going to talk about risk management and how you do that as we move through this information. So on that instance, that would have been a winning trade, but that's how the instruction comes through to the app. You get a buy or sell notification, and then you go and execute through the MetaTrader 5 app, which is the app that I just showed you on the previous screen. So we're not going to dive too much deeper than that into that stuff tonight. What I am going to do is I'm going to talk to you a little bit about risk management, because this is so important. In fact, this is your risk management is the most important part of trading, because if you've got this in order and you've got some rules and discipline in order, which I'm also going to talk about, then that's going to put you in good stead. Now, over the course of this year so far, the instructions that we've been receiving are running at around about 80 to 85% success rate. So out of every 10 trades that are getting sent, about 8.5 are coming to fruition. all right, and giving you an opportunity to take some money out of the markets. So that's not a bad strike rate. Like I said, you're not going to win them all, but 80 to 85% is pretty good. So what I've put together here is some stuff that I put this together for my own benefit, to be totally honest. But obviously, when I started sharing what I was doing with people and people wanting to know, I thought I'd put something a bit more formal together so people could get an understanding of a few things. So this is just some basic information. So on the right hand side here, you can see what's called pips. Let me just check them at the beginning. Yeah. So pips. So 10 pips would be the equivalent of $1 in the price of gold moving. So as an example on this slideshow here, price at $2,000 moves down to $1,999. That means price has gone down by 10 pips. Now the pips will become relevant to you when you start trading, because when we're looking to make some profit or we're looking to put a stop loss in place, we're working off pips, which, like I said, is ultimately $1. 10 pips is $1, 20 pips $2, 30 pips $3. Once you start to get an understanding of the values of pips and the dollar and the price and so on, things are going to become a lot more clearer for you. I don't expect you to understand it all right now. It's a bit like riding a bike. Once you get going with it, it all starts falling into place, and before you know it, the stabilizers are off and you're away and you're good as gold. So that's what pips are. 10 pips are the equivalent of $1, and that's the price that we see gold moving on the current chart. At the moment, gold is trading. It won't be moving right now because it's the weekend. The market's open at 10 p.m. tonight and the close at 10 p.m. on a Friday night. So the price of gold closing on Friday closed at $4,155. That's the price that it closed on Friday. So we're going to use something called a lot size to take a trade. So when you look at the MetaTrader app, I should have actually put this in it actually, but when you look at the MetaTrader app before you place a trade, right, let me just see if I can show you on here again. See if I've got it on this part. No, I've not got it on there, so it's going to be pointless trying to show you that. Yeah, I'm not going to be able to show you that because I haven't got it on there. I'll make a new slideshow so I can clip that one in. But basically, a lot size is going to be relevant to how much you're risking per trade. Bloody close that one off now. Sorry guys, bear with me a sec. Open that back up. So your lot size. So if when you enter a trade, you have your lot size. A 0.01 lot size means that based on 50 pips, which would be a $5 movement in the market, a 50 pip stop loss means you are risking, based on a 0.01 lot size, you would be risking $5 on that particular trade. So again, this part for you at the minute is like, what's he talking about here? I don't quite get it. It will take you a couple of conversations and a couple of bits messing around on the app to figure out exactly what I'm talking about. But like I said, trust me on it. Once you get going, it's like riding a bike. You'll soon pick it up. So on a 0.01 lot size with a 50 pip stop loss, which is typically between 50 to 100 pips that the traders will give us in terms of a stop loss, then you're going to be risking $5 based on that equation. If your lot size is 0.02, that just means that for 50 pips, $5 in price movement, you would be risking $10. You can flip that on its head as well from a projective standpoint in terms of the targets, the take profit areas. If price was to move 50 pips in the right direction, then you'd win $10 if that were where your take profit were going to be at 50 pips. So again, guys, I don't expect you to understand all this right now. This will all fall into place when you get rolling with it. But this is the important equation that you need to figure out and learn to then take you into your trading journey. Because what you don't want to do is come in with, say for argument's sake, £1,000 account and start trading on a 0.05, because you're going to be risking far too much for that particular account size on a trade. And you can start, if you take a couple of wrong trades, the market goes the wrong way, then you could be losing your money pretty quick. So We'll talk more about lot sizes when you do get started and the correct risk management for your account size. So this is just a compounding plan that I've put together. This is hypothetical. Don't look at this and take it as gospel, assuming that if you put 500 quid in, you're going to make this amount of money after this amount of days. This is just a hypothetical example based on accumulating 2% per day on a £500 account. Over on the right hand side, you've got a 5% growth compound example, hypothetically, of what you could achieve over the course of 60 trading days. Now, bear in mind, we only trade 5 days out of the week. So over the course of a month, you're going to get the opportunity to trade around about 20 days, depending how the month falls and how many days you've got. So over the course of, let's just say 3 months for argument's sake, based on compounding your account by 2% per day, from 500 quid, that would be almost 3 times your initial investment over the course of 3 months. I don't think that's bad. What a lot of people look at when they look at this think, oh, 2%. If you put £500 in your bank account and left it for a year, you'd be lucky to make 2 pence on it. So 2% in what we're doing, there's no guarantee. There's nobody saying you're going to absolutely nail 2% or 5% or 10% a day. There's no guarantees with any of this. There's absolutely risk involved in it and a real potential to lose money. But if you can accumulate that, by the time you get to day 60, like I said, you've 3 times your money. If you go over here and go 5%, then the numbers get significantly more different from a £500 account. You're not far off. Well, you've almost done 20 times growth on 5% a day. Now, like I said, hypothetically, this is just giving you an idea of how compound interest can work if you have some rules and discipline in place, which again, we're going to talk about as we move forward. That's just the same example on a £1,000 account. And then we've got one on a £5,000 account. But this is where it gets important, guys. And these are my rules. So again, anything that I'm sharing with you today is purely from my own perspective, the way I look at it and the way I look at the opportunity. But this is the most important thing that I've implemented into my own trading plan, and it's having rules. Because too many, this is why people lose money coming into trading, and I'll go off on one a little bit here. People come into this market because they've seen the shiny object stuff online where, you've got young idiots, posting shit all over social media, making out as though the, mega rich millionaires and all the rest of it. The reality of it is a lot of people are going to lose money. And that the reason for that is, particularly with the strategy that we've got and the success that we're having from a percentage standpoint, is because people cannot get their emotions in check and they don't have rules and discipline in place. So this is something that I'll bang on about all day, every day to people within our community, because I've been the person that has been the gambler. I've been the person that has lost a trade and then tried chasing it back, over leveraging, taking too many trades, risking more than I should, and ultimately blowing accounts. I've been there and I've done it. So I've put these in place, these rules in place, to keep me accountable to my trading plan. So these are my personal rules. You can look at them and you can take some ideas from them, or you can implement these rules yourself, or you can look at it and think, I don't care about rules, I'm just going to wing it. If you come in with that attitude and that mentality, I can pretty much guarantee you're going to be one of the statistics on the wrong side of trading. All right. And there's a lot of people that sit in that number anyway already. So you'll just be joining another bunch of people who have, blown the money because they've not had no rules or discipline. So rule number 1 for me, and I've been burnt with this, is entering trades without a stop loss. That is absolutely criminal in my opinion. I know traders that trade without a stop loss. I know people that do that. I know people with very, very large accounts who can probably afford to do that, who trade without stop losses. Not for me. I'm a little bit more conservative because I've been burnt too many times by not having a stop loss in place. All right, so having a stop loss in place, you know exactly what is at risk every time you enter the market then. So based on the lot sizes, what I was talking about previously, and the pips and the stop losses and so on, once you work out that equation and you understand that, then you will know where your stop loss is going to be in the market. You will know there or thereabouts what you're going to be risking every single trade. Now, for me, I don't want to really risk more than 1 to 2% per trade. Sometimes I do a little bit more than that, depending how many entries I've taken on a particular trade. But realistically, I don't want to be risking more than 1 to 2% of my account. So rule number one, having a stop loss in place, I know exactly how much or thereabouts, I know roughly what I'm risking on every single trade. So entering with a stop loss is the most sensible thing to do, in my opinion. All right. Rule number two, if you wake up on the wrong side of bed, don't even bother entertaining the markets that particular day. If somebody's pulled out on you and you've nearly crashed your car, you've had a bit of road rage or whatever, don't bother entering the markets when the trades come through and the notifications come through. You've had an argument with your missus, you've got some stress on at work, the kids have had you up all night, anything like that where you can potentially be in the wrong frame of mind, just don't bother trading that particular day. Because it's an emotional game as it is anyway. So if you're already riled up or angry or sad or your emotions are all over the place anyway, then trading in that frame of mind is going to do you absolutely no favors. It's probably going to do you more harm than good. All right, so that's my second rule. Number three, if I hit a daily target, I'm going to stop trading for the day. Right? So my personal target, I'm happy anywhere between 2 to 5% a day. I know some people that are doing 10, 15, 20% a day. Good on them. Fair play. That's great. If people can do that, I'm absolutely buzzing for them. For me personally, if I can do 2 to 5% growth on my account per day, I'm chuffed with that. Because there's nowhere else in the world am I getting 2 to 5% a day on my money. And neither are you. And if you know somewhere where I can just lump a little bit of money in and forget about it, I can do 2 to 5% a day compound growth without the stress of trading, then please tell me about it. Let me know because I'd be interested to hear about it. So rule number three, once you've hit your daily target, whatever your personal choice is in terms of your percentage growth, just stop. Turn the app on mute because the traders will send out opportunity. Every time an opportunity comes into the market based on the strategy that we're using, the traders will send the instruction. Whether you've hit your target or not, they will send it regardless. So the best thing you can do at that point of hitting your target is put the app on mute, so you're not getting no more notifications. And rule number four is the same, but it's the other way. And this is the hard one. This really is the hard one. If you hit a certain percentage loss on your account per day, whatever your risk appetite is, again for me it's 5%. If I drop 5% on my account on a day in a day over a few bad trades, I'm done for the day. And again, I've been the person in the past where I've lost my 5% and I've just gone, I'm going to get this back. Next instruction comes through. This is definitely going to be a winner. I'm on it. I'm actually going to over leverage this time to try and get that bit of money back that I lost. You end up in a gambling mindset. Again, there's no sugarcoating or bullshit in here. That is what's happened to me, and it will happen to many other people. All right, so I'm trying to give you this information based on my experience to help the ride be more smoother for you than it has been for me in the past. All right, so if I lose 5% in a day, the app is on mute and I'm forgetting about it. Yes, I'm going to be pissed off and kicking the dust for a little bit, but I'm going to go away, take my mind off it for a while, and I'm not going to come back to the market till the following day. Right, that's just my personal rules. So to get started, these are the apps that you're going to need. There's actually a new app that we've got now. We've got a new app called the Signal Vault. It's only available on Apple at the moment. I should update this and get it on here, but I can tell you about that if you are going to be a part of this community. So we get the instructions that come through Telegram. We use MetaTrader 5 to place the trades. Vantage is the broker that we use, reputable broker, the sponsor of the Ferrari F1 team. They've been around for 15, 20 years. So we use those guys. And then the Google Authenticator is an extra layer of security for when you look to withdraw your money from Vantage. Extra layer of security. And then TradingView is where you can look at the charts and start to mark up the charts and things like that, because on a weekly basis, like I said, we've got some guys who come on and do some training calls teaching you the strategy that they're sending us the instructions based on. So not only have you got an opportunity to follow the instruction, but also you've got the opportunity to learn the exact strategy and become independent and master the strategy yourself and then go in the markets yourself without relying on instruction. All right. All of this, what I've just shared with you, is totally free. Right. The only deal is you have to use our broker. Right. So you use our broker, make a deposit with our broker, then you're eligible to come and start taking trades with our community. That is, there's no gimmick to it. There's nothing hidden behind anything. That's just how it is. And another thing, being totally transparent with you as well, because a lot of people say, what's in it for you? Why are you sharing it? I've got a deal with a broker where the broker will say to me, if you're going to bring people to us, it's like a referral program, we're going to pay you a commission. That's how it works. So that's just me being transparent and laying the cards on the table. So if anybody's wondering why I share and promote it, number one, it's because I believe in it and I've had success this side of Christmas. And number two is because there's another business opportunity on the side for me for building an affiliate network, client network as well as an affiliate for Vantage. So that's the formalities of the information I've got for you for tonight, guys. If you're not already a part of my community group, I will drop the link. If you're watching on Facebook, I'm just going to drop my community link on Facebook now because we're streaming live over there. And then you can just jump in. I'll drop it on afterwards. I can't see it on my phone, so I'll drop it in afterwards. If you've got any questions that you want to come at me with, inbox, anything like that, feel free to do so. So Facebook, I'm just going to drop you off. I'm going to stop the recording on Zoom.